is going on YouTube? Brendan from Market Makers, very special video update for you. I watched the head of the banking cartel, Jerome Powell, head of the Fed, give his presser. I want to give you my take on it because look at my screen. All 11 sectors of the broader market are green. All of them. The Dow rallied up almost 900 or over 900 points. Why did this happen? Well, let's start in the beginning because it was a very unique press conference. Powell opened up with a speech about how he feels for the average American, the rising cost of goods and services, energy, commodities. It's all more expensive, and he understands that, and his mission is to use all his tools necessary to fight inflation, which is why you're getting a 0.5 rate hike, okay? This is in the backdrop of Powell saying repeatedly how strong the U.S. economy is. He keeps referencing the unemployment numbers, which are at lows of 30 or 40 years, I believe he said. Maybe he said 40 or 50 years. If that's true, then why don't we raise rates more to really fight inflation? He was asked that question directly by a reporter, and he stumbled and bumbled around, and he gave some type of canned answer that didn't make any sense about, well, we're looking at the data. We're going to continue to go forward with these 0.5 rate hikes. This is a strategy that we decided on. And the answer is, the truth of the matter is, what Powell did was to protect the markets. The NASDAQ was in a crash, and the S&P was down 14%. This is an election year. The Fed is a political animal, as you guys heard me say. The powers that be do not want to deal with a recession after a negative GDP print for the quarter. The next quarter, if it's negative, that's a recession. They don't want to deal with a recession, a stock market crash, and record high inflation. So they're trying to thread the needle, appear to be fighting inflation, and protect the markets at the same time. Can they do that? Well, the markets rallied based on what he said. But let me show you who he's really protecting. This is really interesting because the average American doesn't have a lot of exposure to the equities market. You know who has a lot of exposure to the equities market, which is why he opened up his speech saying how he feels for the average American? Here, I'll show you. Soaring markets helped the richest 1% gain $6.5 trillion in wealth last year, according to the Fed. The stock portfolios of the top 1% are now worth $23 trillion, and they own a record 53.9% of individually held shares, according to the central bank. That's right. The top 1%, the donor class, the American oligarchs, own more than half of the individual shares in the stock market. That's who got protected today. So when your food costs and your energy costs are skyrocketing, and Powell says they can't do anything about that because of the boogeyman in the room, Russia, 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 they are protecting the marketplace. If you raise rates too much, you're going to crash the markets. They're going to readjust, and that's still going to happen. But what you're doing now is attempting to puff more air into the bubble, okay? Let's look at this. So the Fed says they can't control commodity costs. A lot of this has to do with Russia. He referenced Russia multiple times. Is that true? Well, let me explain something to you. The Fed printed 25% of all the money in circulation since the virus crash. When you print money, when you have more of something, what does that do? It makes your currency less valuable. It makes whatever that thing is that you print it more of, made more of, created more of, less valuable, supply and demand, because you have more of it. Inflation, the word itself literally means to inflate. You inflated the money supply. So now what you're spending as your currency is worth less money. Goods and services are costing more. Transportation's costing more. And of course, the two things most Americans care about the most, food and energy, have skyrocketed. This is why the Fed doesn't want to look at the overall inflation. They only want to focus on the core. Let's just look at this really quickly. So if everything is because of Russia, if everything is because of the Russia-Ukraine conflict and supply chain, why was oil up 55% in 2021? 55%, well before the conflict. Oil's up 36% this year. Let's look at energy cost. So we have crude up to now 64% up, 60% for Brent, 184% for natural gas, 70% for gasoline, 108% for heating oil. Coal is up 250%. Does that sound like 8% CPI? And if you're holding out for uranium, that's up 76%. Let's look at food costs, though, because if everything's because of the Russian invasion, do we get a lot of beef and veal from Russia? Because that's up 16%. Pork is up 14%, poultry is 12.5%, fish and seafood 10%, eggs. We must get all of our eggs from Ukraine because eggs are up 11.4%. Notice all of these numbers are higher than the official Fed CPI. That's because that number has been played with. They allow substitutions. If you use the same calculations from the early 1980s, inflation right now is 16 to 18%, the single highest year of inflation since World War II. So the Fed raising at 0.5 does literally nothing to fight inflation. They're taking a big bet, a big gamble that what will happen is peak inflation will start to come down on the CPI, meaning that maybe next month, instead of 8.5, it'll be 8.3. The month after that, maybe it'll be 7.9. And at some point, the Fed will stop raising rates. They will be forced to pivot because the markets will continue to cascade down in a wave fashion, and they will have to pivot and go back to quantitative easing. And when they do that, they will be devaluing, debauching our currency even further. And when that happens, guys, guess what? You will have inflation come back roaring. Inflation is sticky. Costs will continue to rise and the markets will be dumping. Okay, this is setting up for a meltdown. This is why it is so dangerous. And it's very important you guys understand this and prepare for this because bubbles take a long time to pop. And when they finally do, they are catastrophic. I was there for the dot-com bubble. I was there for the '08 bubble. And we are on the longest bull run in the history of the stock market. And this bull run has been parabolic since the virus crash because of all the money printing. The S&P typically returns 10 to 11% a year. It's gone up 120% since the virus crash. That's the type of level we are dealing with. The households, house prices have gone up 20%, a record last year. To buy a house now versus the median household income multiple of the average American family, it is at a higher rate than it was in 2008 for the great financial crisis, the housing bubble, which, by the way, the Fed said housing has never been in a bubble. Shortly thereafter, everything crashed and 16 trillion in wealth got wiped out from America. So guys, just be very well aware. The Fed has no idea what's going on. Don't confuse incompetence with malice. I don't think Powell's an evil person. I don't think he's a bad guy. I literally think he has no idea what's happening, just like all the previous Fed chair people, which is why they miss every asset bubble that forms. They don't understand the fundamentals of market cycles. They don't understand truly the pain people feel at the pump, at the grocery store. If they did, they wouldn't be giving you a 0.5 rate hike that the markets absolutely love because that is a signal he's not serious about fighting inflation. The political class and the American oligarchs are being protected. It is an election cycle year. They are not going to let the markets crash as best they can, but at the same time, they have to have this facade of appearing to fight inflation, okay? The new numbers came out today. Private payroll numbers came out. We were supposed to add 400,000 jobs. We added 200,000. Our trade deficit is ballooning and exploding in the red. We did a record 22%, minus 22% trade deficit. What does that mean? That means A, we're not producing anything, and B, nobody's buying anything that we do produce. The economy is a very, very thin veneer of strength. It is a paper tiger, just like the stock market. It's going to wave up, it's going to hit key resistance, and it's going to wave down again. And this cycle is going to repeat until we have capitulation, which at some level, who knows, maybe the next rate hike, maybe the rate hike after that is going to happen. And when it does, guys, be prepared because this will be the beginning of the meltdown from the super bubble, and it's going to affect everybody. And, you know, it may not affect these guys, but it's going to affect all of us normal people. All right, guys, go ahead and smash the like button if you like this video, and definitely check out my Bitcoin video. I'll go over how this affects the crypto market. And of course, starting next week, I'll have commodity videos and stock market videos coming out as well. Be sure to stay tuned. Really appreciate you guys' support. Have a fantastic evening, everybody.